What's up YouTube, this is Sankey from Stockflix and I make videos on the stock market. Now guys, today I'm coming at you with 3 hot stocks that you guys should be loading up on for next week. Now before I do give you those guys, I'm trying to get this channel to 1,000 subscribers before Christmas. Now not long left, only about 20 days away. So what you guys could do to help is just to introduce the channel to someone close to you, whether that's a friend or a colleague, a parent or a son or a daughter guys. That'll go a long way into helping the channel out. Now guys, last week, I want to do a recap on last week's winner, right? So I put you on this stock that was LCA, right? That's Lancadia Holdings. That's the SPAC that gives you access to Golden Nugget. Guys, they had a fantastic run up, yeah? Yesterday, up 18%. This is amazing, guys. I think this could easily be a $50 stock by this time next year. Remember, the online gaming market is booming, right? And that's due to more relaxed regulations in certain US states. So they have a lot more growth potential. They have a lot of potential to capture new customers, right? So it's a fantastic stock. If you haven't already, go and grab your 100 shares. That's ticker symbol LCA, guys. So guys, the first company I want us to load up on next week is Alibaba, guys. This is ticker symbol BABA. Now, if we look at their share price graphs over the last 6 months, nice smooth run up until about early November, and the share price dropped off because of more intensified regulation in the e-commerce space, right? Because they're testing monopolistic behavior. So there's a bit of a sell-off there by investors. Now guys, this is an opportunity for us to capitalize on this and make some fantastic returns off Alibaba. Now, I really like Alibaba because if we look at their last quarterly earnings, guys, they completely smashed estimates. And this is what I really like to see. I like to see companies that are beating estimates regularly. So guys, if we look down here, their cloud computing business, which is an area of focus for them, jumped 60%, while their core e-commerce business jumped 29%. Guys, this is fantastic news, right? They're focusing on their cloud computing. You know, they're already established in e-commerce. They're trying to build out new revenue streams and they're doing very, very well. They've got a lot of potential in this business. Now, one thing that's interesting to note, guys, is their earnings report came out on the 5th of November. And if we look at their share price trading on the 5th of November, guys, they dropped down 3%. Guys, this is what I like to see. I like to see these inconsistencies that I can capitalize on, right? So you've got a company that's earnings are growing like this, but a share price is coming down the other way. Guys, this is what I like to jump in on, capitalize on, and make fantastic returns when the market recorrects itself and realizes that Alibaba is a fantastic business, right? You can make a lot of money investing in Alibaba. So guys, now let's look at their moving averages, right? Because it reveals some interesting things. The red line is their long-term moving average, right? The yellow line is their short-term moving average. Guys, as we can see, they're trading right now below their long-term moving average. Guys, to me, this is a fantastic opportunity. Why? Because right now their shares are priced below where they normally trend, right? So this is seen as a relatively cheap asset. So guys, we can make the most of this by getting some Alibaba stock. Now guys, in terms of where I think this is going to finish up next year, I think somewhere in this channel, somewhere between 360 and 320, guys. Now we can expect a bit of volatility because of the Holding Foreign Companies Accountable Act. So there's going to be some fluctuation in the share price over the next couple of months. But guys, I think we should finish somewhere in this channel, 360 to 320 in 12 months. The share price now is $267. So guys, go and load up on some Alibaba stock. So guys, the second stock I want us to load up on next week is Hubspot. Now this is probably one that's not on your radar, but guys, there's so many opportunities in the stock market to make a lot of money. That's why it's so fantastic. Now Hubspot, if you don't know them, they make software for sales and marketing purposes. This company is doing fantastic. If we just look at their long-term share price graph, guys, I love to see companies that have this long-term upwards trajectory, guys. It means year over year, they're delivering for investors, right? So this gives us confidence that going forward, they're probably likely to deliver for us investors some more. So guys, Hubspot, again, like Alibaba, smashed their last quarterly reports, guys. It was fantastic. In their last quarter earnings, it was a surprise of 115%, guys. This is fantastic. This is what we like to see, right? Over the last 4 quarters, the company has surpassed consensus EPS estimates 4 times, right? So quarter after quarter, these guys are delivering phenomenal things. So guys, if we look at their moving averages again, remember the red line is their long-term moving average. The yellow line is their short-term moving average. Guys, when the short-term moving average crosses from beneath and goes above the long-term moving average, this is a fantastic trend, right? This means the company is on a different growth trajectory to what has been in the past. It's now soaring, right? It's now skyrocketing. That's what we can see with HubSpot, guys. I think this is a fantastic opportunity to make a lot of money. So guys, in terms of my 12-month price target for HubSpot, the range is going to be narrower than Alibaba because they're not facing regulatory pressures. So my 12-month price target is going to be 480 to 420, guys. Anywhere in this channel, they should comfortably finish up on. Guys, that's a nice uplift on their current share price, which is $387. So guys, I want us to load up on some HubSpot. So guys, the last company I want us to load up on next week is Caesars Entertainment. Now guys, this is another play like LCA. These guys, they're involved in gambling and casinos. So again, we know this industry is booming. So it's not just the LCA, it's not just DraftKings that's going to do well, guys. There's other companies as well, and we should diversify our portfolios and get a piece of that action as well. So Caesars Entertainment, again, if we look at their share price graph, guys, they started back in 2016 with $11. Nice increase over time. Obviously, we had a drop, massive drop because of COVID, but guys, they've bounced back, right? And the future is looking really, really strong for Caesars Entertainment. Guys, they've just acquired William Hill, right? And this should really, really help their online gaming segment, right? Because we know that's booming. If we just recap and remind ourselves, there's more relaxed regulations in the online gambling segment, right? And there's a lot of growth potential, right? So similar to how we have, you know, the EV market and the regulators, it's a favorable market from the regulator standpoint, because they're banning gas vehicles. Guys, the online gambling segment is the same, right? They're removing restrictions. This is going to allow a lot of companies to make a lot of money, right? Because they have access to so much more potential customers. Now, if we look at their moving averages, guys, it exhibits the same thing we just saw with HubSpot. Guys, their short-term moving average, that yellow line, is going above the long-term moving average, guys. This means they're on a different growth trajectory now, and they're heading for the sky. So this is a fantastic company to be loading up on, guys. In terms of my 12-month price target for Caesars Entertainment, I'm going to go between $130 and $100, guys. They're currently trading at $73, so I think they're going to have a fantastic 2021, and I think a lot of these companies that are in the casino, the online gambling segment, are going to take off next year and 2022, guys, because the growth in that segment is forecasted to skyrocket. So guys, I want us to load up on some Caesars Entertainment, and we're going to enjoy some fantastic returns. So guys, now on to the question of the day part of the video, and this question comes from Rosie. Rosie wants to know, I bought NIO for $46. Do you think I bought it too early? He said he's scared and he's thinking he made a mistake by buying NIO. Thank you very much for sending in your question, and guys, do send in all your questions. I'm answering every single one of them. I must say you guys have been fantastic in the comment section recently, so keep lighting it up for me. Now, in answer to Rosie's question, I know it's going to help a lot of people out, because a lot of people bought NIO around 46, 45 and even higher. And right now, NIO is looking red for you. But guys, don't worry. NIO is a fantastic business, right? It's got a very strong brand, right? I know a lot of people in China, and they say that NIO, they're seeing more and more NIO cars. NIO's got a fantastic reputation, right? It's got about a 62% referral rate, which is higher than Tesla's. Not only that, they are technologically advanced, guys, right? They have their battery swapping stations, which is a fantastic innovation, right? You know, the consumers can just go in, change their battery in 3 minutes. Guys, they're deploying hundreds more of these next year. Guys, they've got their international expansion piece, right? They are setting up shop in Copenhagen, Denmark, and they're going to then explore and spread the seeds around Europe, right? It's not long before we start seeing NIO cars in the UK, and there's a lot of buzz for NIO in the UK as well. And I predict that they will make expansion plans either next year or 2022 to expand into America next, guys. NIO is a fantastic business. They're only going to do about 45,000 deliveries this year. Guys, that is nothing compared to what they could potentially do next year and the year after. Next year, if you saw my NIO 2021 price prediction, I predict NIO would do about 100,000 deliveries next year. Guys, I think they will easily double, and they're working hard to improve their production capacity this month so they can do a lot more vehicles next month. NIO is a fantastic business. Now, if you saw my 2020 price prediction, I think NIO will end this year between 42 and 46. So if you bought in at 46, yes, your portfolio might look red for NIO. But just hold on for next year. NIO Day's coming. They've got new sedans. And once they up their production limit, they should easily be able to do 90,000 to 100,000 deliveries next year. Guys, this is going to have a fantastic uplift on their share price. And if you saw my NIO 2021 price prediction, I'm still believing that they can do 100. They can have a price tag of $100 by next year. So, Rosie, if you hold on to your stock by next year, you would have doubled your money, maybe even more, because I think that is conservative for NIO. So, anyone who's bought NIO, your portfolio is in the red right now. Do not fear. Just hold on, stay true to your strategy, and you guys will be in the green in no time. Guys, thank you very much for watching today's video. Please hit a like on this video. It really helps the channel out. Like I said, you guys have been fantastic in the comment section recently, so continue to light it up. I'm answering and replying to all of your comments. It's fantastic to have people from all over the world chipping in and commenting down below. Guys, I'm coming at you with daily videos on the stock market, so hit that subscribe button and join the Stockflix family. Until next time, guys, take care.